Okay, so good evening and thank you all for joining us again on our live webinar. Today's topic will be on to lay off or not to lay off. That is the question. So today on our live, we have the pleasure of introducing to you guys Mr. David Simpson. He is the founder and manager of he's a founder and managing director of Prestige Accounting Inc. David has over 20 years in accounting, audit, and business management. He's also a fellow of the Association of the Chartered Certified Accountants and a fellow of the Institute of Chartered Accountants of Barbados, of which he is the former president. He is currently a director and vice president and the former treasurer of the Institute of Chartered Accountants, and he has a keen interest in entrepreneurial culture and business development, and is also involved in several other entrepreneurial business activities and projects. Also live with us today that we'll be hearing from later in our presentation is Ms. Kristen Turton. She is an attorney at law and the principal and founder of KCT Chambers. Kristen has broadened the scope of her understanding by being the chairman of a severance payment tribunal, a tutor in the Faculty of Law at the University of West Indies, an international member of the Association of Personal Injury Lawyers, and a competitor in the sports of weightlifting for Barbados at the Central American and Caribbean Games and the Commonwealth Games as well. So help me to welcome David and Kristen.
Okay, good afternoon, everyone, again, and thank you, Kamisha, for the introduction. And it is a pleasure to be able to share a few thoughts with you on the topic as outlined for today's session. I've captioned the two topics that you've asked me to address as financial tips in a crisis. So I'll just begin by sharing a bit of a background in relation to finance and crises and where I think our focus can be for the next 15 or 20 minutes, and then I'll look forward to any questions and discussion. So what I propose to do then is to just go through a few introductory comments, then we'll look at budgeting in uncertainty. We'll look at a few tips in terms of negotiating with lenders and vendors, and throughout my discourse on those two topics, we'll consider if there are any specific steps that you can take that are unique to being in the middle of a crisis. So if we look back at our immediate business history and business cycles across the region, locally and also internationally, we may be able to identify that we tend to go through 10-year cycles in terms of what I refer to as global shocks. If we just look at the last 20 years, we would have begun 2000-2001 with the crisis surrounding the 9/11 terrorist attacks. And 10 years later, we would have found ourselves in the middle of a recession starting around 2008-2009. And now 10 years onwards, we are now faced with a health crisis, a global pandemic that once again, like the previous two 10-year cycles, present some financial challenges for businesses and individuals alike. So our consideration today has to be, how can we manage crisis response and manage our businesses regardless of size in the context of a crisis that we have limited control over? And also, how can we manage the environment within which we are supposed to carry on our business and respond to these shocks accordingly? Now, specifically, we gather today within the context of the COVID-19 pandemic, and there is both a health risk and a financial risk, and naturally I will be focusing on the financial fallout. Now, the challenge with the financial fallout or the financial risk, in my opinion, is that from a health point of view, we know the clear steps that we can take to protect ourselves and hopefully stay safe from becoming infected with the virus in this case. However, the financial risk, I believe, can be and likely will be far-reaching, and the challenge there is, even if health officials are able to say if you become infected, you're likely to recover in 4 weeks or 6 weeks, it is very difficult on the financial side for us to be able to better or to emerge from the financial component of this crisis will be within 6 weeks to 8 weeks. If we listen to international media and even listen to other professionals, people are saying that the effects of this financially can last anywhere from 6 months to 8 months, depending on how far in we have to go. We know that many economies have already come to a stop, essentially. Even locally, we see the effects now from this week of reduced airlift. We know the cruise ship industry has already come to a stop. We know several businesses across the country are reducing their activity or closing altogether, whether we need restaurants, stores. We see from next week, some of the banks will also be reducing their hours and closing some branches. So we are not yet sure how long this will last, all the more reason why we need to consider what are the overall steps we need to take in terms of trying to manage our response to this potential crisis. So what are some of the focal areas in terms of financial and business management in the context of a crisis? I think first and foremost, which is where all of our concern has been to date, there's the people, health, and safety component. And with the so this whole social distancing, closing some branches, reducing how we interact with people and so on, having a session like this online as opposed to a face-to-face session, we've more or less taken care of that first quadrant. I think business continuity is where our next step then has to be, because we're now looking at the ability of the business to continue trading throughout the crisis, and then what will be the response after the crisis, especially if we have had to bring our operations to a full stop. Finance viability, and we look at two components of that today in my session, which will be looking at budgeting within constraints and also looking at how can we liaise with our vendors and lenders during this crisis period so that we can emerge as strong or stronger than we went into it. And then finally, and I guess some of this may come out in the Q&A, the final component for me would be recovery and a growth plan. How can you emerge from this process and this crisis even stronger than we went into it? And what are the plans we can start to put in place to grow our respective businesses, regardless of size, coming out of this? And that's essentially the context within which I will share with you today. So what do we mean when we talk about budgeting in uncertainty? If we understand the context of budgeting to begin with, all of our budgets and our performance are going to be restricted or constrained by sales. In other words, what we can do, what we can spend is all driven by what we can sell through our services or our products. If we look at the current crisis, we realize that it is more than ever before our constraint or limiting factor, because everybody's sales at a business level have been declining or have come to a full stop. Unfortunately, though, as we will see as I proceed shortly, there are still costs of operation or existing as a business that have to continue being met, obligations that have to be honored. In the context of budgeting within uncertainty, once we've identified our limiting factor or constraint, which is sales, we need to also consider having an emergency or crisis cash reserve. Now, we know in the context of our local environment for the last 10, 15 years, and even globally, we have been going through austerity measures coming out of a recessionary period, and it is probably often difficult for businesses to have a crisis cash reserve or emergency reserve set aside permanently. But I would want to encourage all of you listening to me that going forward, even emerging from this crisis, it is probably something that we need to seriously consider. How can we work with our financiers, our lenders? How can we work internally within our businesses to create these type of cash reserves that would facilitate our survival throughout these crises? I mean, I think Kristen's session will be very informative in terms of how we deal with staff and layoffs, because most of us, our biggest expense relates to our staff complement or human resource. And even in the context of this current crisis, what do we do if it is prolonged in terms of serving the needs of our human resources, in terms of whether we choose layoff or if we keep them on staff with limited revenues coming in and limited cash resources in some cases, especially for small and medium-sized entities. How do we still provide that safety net and that protection for our human resource complement going forward? So if we go back to my original point of a possible 10-year cycle in terms of when these crises and these major shocks come within the business environment, maybe our consideration of a crisis cash reserve can be driven by that 10-year cycle and putting that into our overall plan. The other component of budgeting naturally then is the expense side. And within the context of uncertainty, we need to be able to analyze our costs into various categories and behaviors. Now, what do I mean when I say categories and behaviors? For many of our businesses, we will have a few categories. They're the purely operational costs, your rent, your maintenance, utility costs, and so on. But then for many of us, there's a production cost within manufacturing. There are the costs of procuring your outputs. If you're into retail, you have to be able to obtain the stock, keep stock on hand, and then be able to trade. And then as we do in Barbados, have a large service sector, I think that's where most of our costs will now be driven by our human resource, because services are based on the human resource, our offshore sector, our professional services, and so on. And I am talking about fixed versus variable cost behavior. Now, where costs are fixed, regardless of our income and revenue, we have to be able to meet these fixed costs. So we're talking about, in large part, things like our rent. To some extent, we're also talking about commitments to our lenders in terms of loan repayments or any other debt servicing. We are talking about insurance payments, the things that we must pay regardless of if we have revenue coming in, and that is to allow us to keep operating or keep our doors open, keep our footprint available to the public. Variable, well, these are the things that will fluctuate based on your sales activity and are not as onerous as the fixed costs. But my position here is that if we can segment our costs at the budget stage into fixed versus variable, it makes it easier, and look forward and make adjustments as need be, knowing that this band of costs called fixed, these are not going to move regardless of what happens. So even for the businesses who have currently closed in the context of the current COVID-19 crisis, they still have loan repayments, they still have rent payments, and so on. And when we come to dealing with our lenders and vendors, we will see in the context of a crisis what some of the options are. But that's the important or the key distinction that I believe we need to make in creating our budgets. One of the key things we can do, in my opinion, in terms of budgeting within uncertainty is to do what theory refers to as scenario planning, where we essentially are preparing a budget for 3 or 4 possible performance and financial outcomes, so that as we manage our businesses on a day-to-day basis, depending on where we fall and what's happening in the environment in terms of what we cannot control or what's beyond our control, that we will be able to come back to a budget that shows us different scenarios. So if I'm able to hit sales target as intended, here is the scenario. If for some reason my sales target is cut by 50%, here is my scenario. If I'm able to exceed it by 50%, here is my scenario. Now, the different scenarios that you choose will be driven by the context and the parameters of the crisis. In the context of COVID-19, I don't think we are going to have a scenario that says we're going to do better than what we planned. We're looking at several scenarios of doing worse than we expected, to right down to a full closure of our businesses for either a defined or an indefinite period of time during the rest of 2020. So I know many businesses, especially smaller businesses, will tend to just have one budget targeted at one particular sales level. But I think in the context of uncertainty, we now need to look at scenarios that say, okay, if I'm not able to meet this target, here are my commitments. If my sales revenue falls by 50%, am I still able to cover my fixed costs, et cetera, et cetera? So we're looking at different scenarios with different conditions, and we try to analyze those. Now, mind you, the conditions will vary depending on the industry that you are in. So what is going to affect our food industry may not affect our hotel industry, may not affect supermarkets and other retail entities. But again, I will come back to this in a bit when we talk about further aspects of planning and also looking at negotiating with lenders and vendors. So the main takeaway here from this slide then, I think, is we need to understand the analysis of our costs into fixed or variable, because for many businesses right now, that's all we are left with, because our sales have either been significantly reduced or stripped from us. And then the scenarios, not waiting for the crisis necessarily, but accepting that we are operating in uncertain times, we come up with various scenarios as to our likely performance so we can better manage ourselves within the context of the crisis when it arises. In the context of uncertainty, I would also want to place on the table for our consideration the usefulness of cash flow forecasts versus budgets, and use them in tandem. And I think for those who may not have a full financial background, just let me spend a little time distinguishing between the cash flow forecasts and our budgets. I tend to link budgets more to our financial statements and our historical performance. So we set a target up front of, I expect to generate 500,000 in sales. I expect to 150,000 in expenses, giving me a surplus of 250,000. And at the end of the year, I match these up against, or at the end of a period, let's say whether it's a month or a year, I match these up against my actual performance, and I see how I have done. Cash flow forecasting, on the other hand, however, is a more involved and active process that takes place on a daily and a weekly basis in the context of business. And what you are essentially doing is you are fiddling with the different components of your forecast and cash flow, whether it's the inflows or the outflows, based on what is actually happening in your environment or within your business. So you're looking forward, you're looking backwards at history, you're looking at today's position, you're looking forward to prospects, you're looking at how your customers have been paying you if they have credit terms, you're looking at the flow of cash business coming into your establishment, and you are then saying, well, based on the inflows I have coming in, here is how I now need to prioritize my cash outflows. What can I schedule for payment? Now, what do I need to defer based on priority, based on cash flow capability, based on agreements or contracts you have and obligations? And then you use that cash flow forecast to assist you in the next step of what we will discuss, which is negotiating with your lenders and your vendors in relation to your obligations. So I think while the business has to have a budget, I think the more useful tool is your cash flow forecast, and you marry the two and use them in tandem to assist you in managing your budgets and your financial position in times of uncertainty. What is useful in preparing your cash flow forecast and your budgets are historical and current trends by industry and by country. And as an aside, I will say I've always had this unofficial battle with the banking sector when it comes to doing business plans for SMEs, where they require 3 to 5 years cash flow projections and forecasted financial statements and so on. My argument for the last 10 to 15 years has always been that the banking sector and businesses are probably better served by having an annual forecast and budget, which is updated every 6 months, and you add another 6 months onto your forecast and share that with your bankers. We live in times that are so uncertain that it's difficult for me to forecast 3 years forward with any degree of dependency. I see no value in it for the banking sector, or focused on a 12-month forecast, and every 6 months we add an additional 6 months onto that forecast so that you always have a continuous 12 months of forecast or budget information that you can work with. The bankers among us may not readily agree, but I put that out there for your consideration in the context of managing finances in uncertain times or within a crisis. So in the context of the crisis, then what do we do? I'm suggesting we adjust, we monitor, and we reset. The adjustment comes in terms of taking your original scenarios and adjusting those now based on the new data that is available as a result of the crisis. So again, if we come back to COVID-19, there have been, for example, many events that have been canceled over the next 3 to 4 months. each of those events would have had vendors and service providers that would have had their budgets based on, let's just take, for example, the Barbados Reggae Festival. Providers from liquor distributors to food vendors to other event services, for example, stage, sound, and so on, security. They would have had a budget already done for this year that includes providing service and earning revenue for Reggae Festival. This now means that that has been postponed or possibly cancelled for 2020. So the adjustment that has to be done by those who may have had this in their scenario would be to take that potential revenue out of my scenario and see where I am now left in terms of my cash flow forecast and my budget. Once we've made those type of adjustments, we now need to monitor what is happening on a daily basis. Again, if there is one lesson from the current pandemic, is that we as persons in business and industry, it is a daily monitoring that has to occur because the situation is changing several times in any given 24-hour period. We spent a few weeks or months awaiting to see if the crisis will hit us in terms of having cases in Barbados. We passed that hurdle just over a week ago. And then came how long would we stay open in terms of businesses, but the fall off in airlift, the closure of the stoppage of cruises and so on immediately meant that hotels went into a tailspin, travel agencies went into a tailspin, catering, restaurants and so on went into a tailspin. So now we've seen this week as an advancement that most of these establishments have now closed or scaled their operations significantly back. And that has come from monitoring what is happening in the environment. Once you've adjusted and you've monitored, I think the hardest part of the process now is resetting those priorities and what I deem to be the emerging with as a matter of urgency now and what can be deferred, whether automatically or through the steps that I will go through in terms of negotiating with lenders and vendors. But I would dare say that one of the key priorities right now is to reset to make sure that staff are adequately provided for and those immediate necessities. And then we can look at things like reducing our, naturally revenue is down, so we're reducing our inputs to provide the service or the product. We're reducing, if possible, we may be suspending rent or looking at how we can defer rent payments and other commitments. So a reset is necessary in the context of the crisis, and you may have to reset a few times depending on what is happening in the wider environment in terms of uncertainty. And I think all of us listening to me understand the level of uncertainty in the context of COVID-19 right now, and what are some of the likely or possible responses that we will have to resort to. So I think in a nutshell, I think those are some of the high level points that we need to consider in terms of budgeting within a crisis. And I am willing to get into anything else based on questions that may arise at the end. So let's just spend a few moments considering negotiating with lenders and vendors in the context of the crisis. Now, we have seen so far where the banking sector has started to release statements in terms of what they will be doing in terms of debt repayment. Some banks have gone as far as not just addressing loans and mortgages, but also looking at credit card payments and other payments. We've not really had so far any public statements from other vendors, for example, utility companies and so on, as to what happens. The real challenge in the context of this crisis is work stoppage for businesses, which then means potentially for some employees, a stoppage of income as well. And even if they are laid off and are depending on the national insurance scheme, there is still some measure of the income into their hands. So the real question has to be, what are some of the provisions that are going to be made and put in place, even when it comes to our utility obligations and other obligations that households and businesses will have? To what extent will these be suspended in the context of work stoppage, business stoppage, or just reduction in revenues? So I think what we need to consider, I think I'm getting ahead of my slides a bit. Right, that's the first one. So we need to look at what's the nature of the crisis. The nature of the current crisis is we do not know what next is coming or how long it will last. That in essence is probably a textbook definition of uncertainty, and that is what is going to drive the steps I suggest to you shortly in terms of dealing with your lenders and vendors. Internally, however, you need to do an analysis as a business and even as a household. What are the extent of your likely cash flow challenges based on your budget, based on your scenarios, based on the nature of the crisis and what is happening in the wider environment? What is the extent of those cash flow challenges that you're likely to face? And what is the category and type of your liabilities? If you're a business that has no loans, no mortgages, all well and good, you have eliminated a key component of some of your fixed costs. You may just be concerned about liabilities to your staff, tax liabilities, statutory liabilities, and so on. But that analysis is what will then inform the level and the range of the discussion that you're going to seek to have with your vendors and your lenders over time. So my suggested process that we can follow in negotiating with lenders and vendors is a 4-step process. We need to be proactive and our vendors and lenders early. And this has been my advice to my client I've met with so far within the last week and a half. Do not wait until uncertainty fully sets in terms of your inability to service anything. Itemize who your vendors and key lenders are and be proactive. Contact them and say, look, my business has already suffered X percentage of decline in revenue. We've closed 2 branches, or we are only doing, for example, the fast food industry, we're only doing drive-through sales, and we've seen a significant fall off in people patronizing our businesses. I have X, Y, and Z facilities with you. How can we work together to ensure that we can service those as best we can, but not have to live in fear that you will be coming after us with a heavy hand because we are delayed in making payments or unable to make payments for a short-term period of time. Having placed that on the table, the next step is to ascertain what assistance the vendors or the lenders are currently placing at your disposal. As I said just now, some vendors have not yet made any public statements. Most of the commercial banks, I think I've seen Scotiabank, Republic Bank, the BEC so far that I can recollect, have made public statements as to what they are going to be doing over the next 3 to 6 months. And I know, for example, RBC has offered their clients a moratorium on either principal or interest, not both, but you have the option to choose which one best suits your cash flow. For some people, it may be principal. For others, it may be interest. I know Republic Bank went as far as also speaking to the management of your credit card balances and payments for those. I know the University of the West Indies and BCC, I think they also they have indicated they've suspended payments, or you can come in and work out a payment plan if you are expecting to have difficulties. So once you've alerted your vendors and your lenders, you've taken the second step of ascertaining what they are currently willing to offer, what packages they have available. Then you need to outline clearly, well, these are my expected challenges and these are the components of the various packages you have available that I would like to be able to take advantage of, and understand clearly what are the steps that qualify you to be able to take advantage of all or part of the assistance that lenders and vendors are providing. And the key thing at the end then, step 4, is to agree the way forward together. How can we work together with our lenders and vendors, recognizing that they are also facing the same challenges that we are facing as their customers. So we have to bear that in mind as well. So it has to be a negotiation, as we say, but we have to remember, we have to balance it in the favor of both the vendors and our lenders, but also our businesses, understanding that collectively we are all facing the same challenges. Some other advice in terms of managing our lenders and vendors. My recommendation so far to my clients and others who I've interacted with is that if your cash flow still allows you to, in the context of the crisis, to keep your payments current, by all means, do so. If you have the ability, based on your industry, to forward pay because the reduction in your revenue may come down the road, take advantage and forward pay now if you can. So for example, supermarkets and retail and distributors may be experiencing an increase in their revenue right now as people stock up on items, as people buy hand sanitizers and alcohol and all these other necessities. They may be able to keep current with payments for the next 2 to 3 months or 2 to 3 weeks. And they may even be in a position based on the peak to be able to forward pay. Our restaurants and hotels, on the other hand, are not in a position that cash flow allows them to keep up or to forward pay. So it has to be a case-by-case assessment, but I encourage any business who can stay current to do so, so that if we do go into a full shutdown, at least you are as current as you possibly could have been when your revenue gets fully stripped from you or it starts to decline. I mentioned RBC's offer of principal or interest only, and I think other banks are doing likewise. Please consider the effect of a moratorium. Can your crisis revenue support this? So if you're a restaurant that has had to close last week and you have elected to choose the interest only component, make sure that you have enough revenue coming in within the crisis, or you have enough resources for the next 3 to 4 months or whatever to cover the interest only component. And again, when you do that analysis, that's part of the conversation you need to have with the lender or the vendor upfront in determining. Understand the impact of your revenues over the next 2 to 3 months if you're still open on your ability to manage these obligations, and be upfront with your lenders and vendors as to what is possible. It is a crisis, and so there are going to be options available within reason, but I think many of the options available will be driven by the industry and your area of business, rather than a lot of the vendors and lenders having blanket terms or packages that they just put out there for everybody to take advantage of. And that's the end of my presentation. I believe many of you may have some questions in terms of budgeting and negotiating with lenders, and we'll come to those. But I will pause at this point and hand over to Kristen, who will go through, I think, the most important area: how do we handle staffing and layoffs and so on during this current period?
Good afternoon, everyone. I thought that was an extremely insightful presentation. It's something that's very useful for business people in terms of how do they actually manage their finances at a time like this. Of course, I agree that for most people, their primary expense is really staff. And that's why most people are very concerned with what steps they can and cannot take in relation to staffing. As far as that is concerned, there are really three primary legal options directly in relation to staff. Those options are, the most extreme option I would say is redundancy. And that is where a business at this stage expects, as far as I can see, a business would ordinarily only do that if they actually expect to close. Even though redundancy can speak to a situation where business ceases temporarily or where it ceases permanently. In a context like this, I think that's the only time you would utilize that option, because if you're going to employ redundancy as your option, you have to consider the need to pay, to provide a severance payment and notice holiday pay and these things. That's a lump sum that most businesses just simply cannot find. And if you do that at this time, it doesn't mean that you're never going to be liable for it. Even, for example, if the person goes to the severance payments tribunal and is paid by the severance payments tribunal at some later date, the National Insurance Board can come after you for what really you should have paid. So it's an option, yes, but certainly it is something that should only be considered where you expect the crisis to affect you to the point where you won't be able to reopen. And to be perfectly honest, I don't know that there are many businesses that should consider themselves to be in that position. Even though there's uncertainty in terms of when the crisis is going to end, I think most people, having regards to all the circumstances and everything we've been hearing, would assume that it is still temporary. It is an uncertain period, but is one that is expected to come to an end, and it is expected that at some point business will return to normal. And that point could very well be in 3 months, it could be in 6 months, it could be next year, but it will return to normal. So in that context, redundancy is not something that I would tend to recommend. The other two options are layoffs as well as short time. Now, I would tend to prefer short time, where an employer has some capacity to continue operating, but certainly not at the level that it was operating previously. So you can consider placing your employees on short time and, I guess, spreading the burden. Because if you do that, let's say you had 10 employees. Instead of laying off 5 and 5 continue to get paid and 10 have to go home and wait for national insurance to pay them along with other people, you can have 10 people who are on short time doing less work than they would have had to do before, because the business has less work to do. And at least they can get something directly from you, and they can claim, as the government would have indicated, 60% of the balance, essentially, assuming that their insurable earnings are less than or at the level of the cap. Short time really is a situation in which, well, short time and layoff both operate where it is an expectation that there is either going to be a reduction in business, which will obviously affect the company, or where you have certain aspects of the business where there just simply isn't going to be work of a particular nature to do. And I tend to use restaurants as an example because I think they are in many ways the hardest hit indirectly, but they can still function. So for example, you have a waitress, and because nobody is going into a restaurant to sit down, there's no more in-dining. So technically the type of work that was previously available for a waitress to do is no longer available. However, if the business opts to employ other means of providing food to its customers by way of delivery, curbside delivery, then perhaps that same waitress can be re-employed or re-engaged in another way. And that is a significant consideration for the employer. Now, we did look at, in a previous webinar, at how you can engage with your staff and get them to come to an agreement, because most people just want to continue to earn something. But in that case, that is actually a perfect example of a situation in which you can employ short time and you can negotiate with them and comply with all of your requirements, because you have tried to find a way to provide them with alternate employment before dismissing them or before laying them off completely. Layoff also operates similarly, except that that's a case where the person is sent home, essentially. They are not severed, they're not made redundant. You do not have to make an upfront lump sum payment to them. They are entitled to claim national insurance based on their insurable earnings for the last 104 weeks. But that, of course, is what I would consider to be perhaps second in line, with redundancy really as, I imagine, a last resort for a business that can't function. Layoff being something that you would only do if you really cannot provide anything for the employee to do at this time. And thirdly, the most reasonable one, if you must cut staff in any way, maybe short time, and just trying to negotiate with your staff in terms of how they might otherwise be able to perform their functions so that they can at least get an upfront payment from you. In terms of short time, layoff, redundancy, there is provision in the Employment Rights Act that if you do not follow the requisite procedures, then the employee can be considered unfairly dismissed, or rather they can make a complaint to the tribunal for compensation. So there are specific procedures that an employee can take to do that, but certainly the procedures that have existed to try to protect employees would include actually consulting with them 6 weeks in advance about your need to lay off or put employees on short time or make them redundant, to be able to discuss with them how you propose to select the individuals who are going to be made redundant, placed on short time, or laid off, and the manner in which the process is expected to take place. In relation to all three of those, though, the Act does provide for, in exceptional circumstances, for you to not comply with that 6-week consultation process and to communicate directly with the Chief Labor Officer in order to consult on how best you can address that situation within reasonableness. I understand that at this point, persons are sending letters and have been provided with email addresses to the Chief Labor Officer to ensure that they communicate the need to lay off or to place people on short time and give reasons. I can't imagine that this would be a situation in which anyone would be expected to give 6 weeks notice, but what it means is that you have to be very clear at this point about at what stage will you have to lay off? At what stage will you have to place someone on short time? That required you to sit and properly evaluate your business today. See how it is functioning, anticipate how COVID-19 can impact upon it, including the potential for a national shutdown if we reach stage 3. And to identify how you will take that step if you must do so. And ultimately communicate that in writing to the Chief Labor Officer so that there's advance notice of the possibility that you may have to do that. One other consideration as far as that is concerned is that there are ongoing negotiations at this point with the Ministry of Labor and all of the relevant stakeholders in terms of the current provisions relative to short-time layoff redundancy. And what exists now in writing and binds everyone may very well be adjusted very soon by legislation. It can be easily done once a decision is made as to the form that that is supposed to take. So that the advice that is being given, or rather what I'm explaining to people at this point in terms of their options, is based on current options. And I do think that it is quite possible that that will change in a way that makes it easier for employers and employees. At this point, there is some level of uncertainty in terms of the 60% that was noted by the Prime Minister that is going to be paid to people if they have to work on short time. And I think some of that uncertainty arises because at this point, the legislation really provides that you're only entitled to receive a national insurance benefit for being on short time, or it's actually an unemployment benefit, but you're only entitled to receive that unemployment benefit if your short time means that you're earning less than half of what you would ordinarily earn. So if your salary is $2,000 a month and your employer is only able to pay you $900, then you are entitled to an unemployment benefit in relation to the balance of $1,100. However, if at this point, if you were being paid $1,500 instead of $2,000, you would not be entitled to that benefit in relation to $500. So I would expect that there would be some level of adjustment that would have to be done to the current legislative framework to make sure that if an employer wants to pay less, but that less is not as low as less than half of what the employee is earning, that they should be able to allow the employee to be able to benefit from what was mentioned by the Prime Minister. On another note, I know that the focus is understanding layoff and short time and redundancy. We have to understand those things. But they really should be a last resort, because even though your staffing is your biggest expense, in most businesses, your staffing is really your biggest way to earn as well. It is not like you're paying for a table and the table could or could not be there. Your staff and what they do is what determines your income. It determines your sales. And at this point, I would implore employers to try to be creative, to think of the ways in which they can continue to earn before they look at what they can cut. We have to budget for certain things, and we have to look at everything holistically. But from my perspective, you can look at everything holistically without assuming automatically that your sales are going to drop or that your sales must drop. In some businesses, it may very well be that your sales can increase now. For example, we see the supermarkets, their sales are increasing tremendously at this point in time. And after that increase, as David would have mentioned, after that increase, they can pay forward certain things. They can take that money for when perhaps it becomes more lean. Similarly, you have computer stores and IT specialists, people whose services would be in great demand at this time, as most people are making every effort to try to continue their businesses, but perhaps more from a remote perspective or with the use of more technology. They should at this time be calling everyone they know and offering to provide assistance. And of course, you have to pay for that assistance, but the employer will benefit in the long run if their business can continue going. Once they acquire that income from providing that additional service, then they might be able to pay forward. They might be able to budget for later on when nobody is requiring their services in the short term. So I'm just saying these things so that people can get thinking. And if they do that, there are other legal considerations, because as I've noted, it is important whenever you are engaging anyone to have something in writing. It may seem very well to be a situation in which you don't need that, but you at least need to have something that says what is the nature of your bargain, what is the nature of your agreement, how are you saying that you are going to aid this person and this person is going to aid you, what are the costs associated with that and our obligations. It's a situation in which you can, for example, you could go and you can buy a laptop now that you are going to give to your staff member who's going to work remotely. You may be able to negotiate with the person who is selling you the laptop or the entity that's selling you the laptop and say, well, I'll pay you half up front and I will pay you the balance over the next 3 months. If you do that, it is useful if you have that in writing. Now, having it in writing doesn't mean that you have to have a long formal document with legalese in it. It could simply be that you send an email saying your expectation and that person sends an email responding, agreeing. That in and of itself creates a binding contract, assuming that you are provided with the laptop and you make that payment relative, the first payment relative to the deposit. So things like that, negotiating even in relation to not just your current vendors, but the things that you are going to need to try to continue to function. Taking those types of steps, I think, is where a lot of employers should be looking while still preparing themselves for the possibility of having to reduce their staff complement or to reduce the payments that are to be given to staff. We did, as I said, do a previous webinar relative to how you negotiate with staff members, even things as simple as reducing their salaries and so on, and having them come to an agreement on a temporary basis. And I'm sure that once the series is fully posted and uploaded, that people can take advantage of reviewing that. So I wouldn't propose to go over that again, but it all ties into everything that we've been discussing to this point. And I certainly hope that employers will be able to take advantage of a lot of the messages that we've shared over the past few calls, as well as the very useful, insightful, and encouraging information given to us by David this afternoon.
How do I pay employees on short time?
Okay, so with an employee that's on short time, you pay them less. But the truth is that you have to agree with them. You have to speak to them, have a conversation, and indicate this is why I'm proposing to pay you a lower amount. And once you have come to that agreement with them, and they understand that it is either I pay you less or I lay you off, then chances are you'll get that level of agreement. So you pay them, but you also have to fill out the requisite form for national insurance so that they can go to national insurance and claim the unemployment benefit. And just to be clear, we did cover, for example, how you negotiate a lower rate of pay with your employees. I think that was on one of our calls yesterday.
Next question. What if I must make the decision while, say, on shutdown? Will there be any amendment to the process of conciliation? I think we covered, I could jump right in here for this one. Says that we're currently right now deliberating and having discussion on the shutdown. We are not in a position to speak about what would happen should a shutdown be given. So that question is pretty much, we're waiting for a response for that one. Next question is, sorry, that's the same question. Mm-hmm. What about those high-risk employees who should not be in the workplace at this time? How do we as employers and employees handle that?
That's one of those other considerations relative to perhaps remote working and trying to facilitate the continuation of the employee's ability to perform, but in a remote location, in an isolated location. As would have been mentioned, the employee would need to be able to be provided with the necessary resources to work elsewhere. And that certainly is the first option available to an employer. The second option, of course, is if the business is such that the employer cannot provide the type of work for the employee to do in a remote location, then the question comes as to whether or not that employee really should be laid off for that period of time and have to claim national insurance. Very unusual situation, one that has never been faced before. It is difficult to say that an employer should have to pay someone who just is not at this point capable of performing their job function, not because they are sick, but because there's a possibility that they may get sick. And strictly speaking, I can't see the obligation that the employer would have to pay the employee in that situation. And that's where part of the challenge lies. And that's why we would be imploring the authorities to actually amend legislation or create legislation to deal with this very unique situation to ensure that employees and employers are not disadvantaged. But one way that can happen is you can lay off the employee and then they can claim an unemployment benefit for that period of time.
Good afternoon, everyone. I just want to jump in here for a second to continue on that point. So, just as Kristen said, there is some ambiguity in terms of how we deal with this situation because we are in unusual circumstances. But we know that there are some persons who are indicating they don't want to come to work for fear of what might happen. What we advise the employers to do throughout this webinar is to make sure you have your health and safety protocols in place.
Yes.
If you have your health and safety protocols in place and the government has not issued a decree that a certain group of persons should not be at work, then if that person does not come to work, as Kristen indicated, we can see no legal basis to obligate the employer to pay that person. But then the question comes, is that really a truly genuine layoff situation? Because it's not that you have diminished work, it's that the employee does not want to report to work. So in that situation, when we typically look at the guidelines for a layoff, there's no reduction in the work. So we just have to be a bit careful in terms of how we utilize layoff, because then we don't want NIS challenging it to say, you have a cashier at a supermarket and you're telling me it's reduced work. This seems a bit strange at this point in time.
You, Sheena.
Sheena, if I can just jump in and add 2 points in terms of the at-risk persons in the workplace. I think a lot of employers have used maximum creativity in this regard, but I think the foundation of it can be assessing how essential each employee is in terms of being physically in the office. I think some segregated their staff into teams to ensure there is still minimal efficiency in the office where they are a people-facing organization or there is other factors influencing why they must be in office. Others have opted to work from home. Others have reduced hours, for example, where there are cashiers involved taking payments and so on, reducing the hours where the public can come in to 2 days a week for 3 hours each of the days. So there are different options, but again, I would encourage all the businesses to assess how do you interact with the public and what's the essential requirement for your staff to be physically there all the time. And you have options to rotate them between work from home and work in the office, 3 days at home, 2 in the office. But again, that is also driven, as we heard earlier, by your ability and your technological capability to facilitate working from home. So I think we all have to assess our individual situations in that regard and make sure we protect our at-risk people first. I had one entity contact me today and my position was, what can we do for the at-risk people first? If they don't need to be in the office and they have the ability to work from home, by all means, let them work from home, especially if a lot of their responsibilities have been suspended. Let them do what can be done from home if it doesn't need to be in the office. So I encourage everybody to just look at your individual business situations and see how best you can adjust and protect those people first and foremost. As I had in my opening quadrant, people's safety and health is the first priority, and then we address all the other issues afterwards.
Agreed, David. What I will say to persons, our very first webinar was on remote work. And what we're going to do, today's session, this 3 p.m. one, is the final one in the series. But we're going to package the entire series and make it available. The very first session was on remote work, and we would have issued a circular from the BEC advising employers that wherever remote work was possible, that they should try to employ that at this point in time as we promote social distancing to ensure that we don't, well, hopefully prevent us getting to a stage 3. So we sent around that information to employers, and as I indicated, some of the points you just highlighted, they're under our discussion on remote work, and some suggestions or ideas of how you can employ remote work are also a part of our toolkit that is up on the website. So we're trying to make the resources available to the employers so that you can effectively look at your organizations to see what you can do at this point in time. So yes, one of the things we have repeatedly said in our publications is that it's a public health crisis, and we need to consider the impact on people even more so when we look at our businesses and the impact.
As you said, we don't know how long this may last, whether 3 or 6 months. What happens if someone has to be kept on longer than 13 consecutive weeks of layoff or short time? Would the employer have to pay severance?
Technically, yes. Unless the law changes, the employee would be entitled to take the steps that are outlined in the Severance Payments Act to terminate their contract and claim severance. But as I said, the normal process for that is an employer is required to pay severance, but the National Insurance Board is empowered to pay that first once the Severance Payments Tribunal determines that the employee was entitled to severance and took the appropriate steps. And then the National Insurance would go after the employer. So there would be a requirement to pay, but not immediately. It would not be a situation in which the employer has to now find the requisite amount of money to pay the employee. But it should be noted that in any event, these benefits are only available once the employee has been employed for no less than 2 years, essentially 104 weeks consecutively. So once they've been so employed, then they will be entitled to claim those benefits.
So with regards to redundancy, who is entitled to pay severance? Are there any NIS benefits to an employee who has been made redundant? Is it true that after the 13 weeks laid off, that the employee is definitely entitled to severance?
Yes, as I said, the employee is entitled to severance. It is a question of the process that the employee must take. There's a process where the employee has to follow the Severance Payments Act, where they have to provide the employer with notice of the fact that they are terminating their employment and claiming severance. That is done by way of a letter, but I wouldn't, of course, want to go into too much details about exactly what they have to do. If it is that they wish to do that, certainly there is sufficient guidance that is ordinarily provided to the employee by the Severance Payments Department of the National Insurance Office. They provide that guidance to employees frequently. I think there was one other aspect of that question. Can you really start with the question again?
Sure. With regards to redundancies, who is entitled to pay severance?
Right. In terms of who's entitled to pay, as I said, the employer is the one that is bound to pay severance, but the National Insurance Board will pay in advance. There's a severance payments fund that money is paid towards that comes out of every employee's pay. And it's from that fund that employees are paid so that they don't have to wait for the employer to find the money to pay. And if they cannot, then as I said, the National Insurance Board can then proceed against the employer who has not paid. It should also be noted that if an employer proposes to pay severance, that they can apply to the National Insurance Office for a rebate in relation to the severance that they have paid. I think they will get about 1/4 of what they pay in severance, but the point is at least they will be able to recover something.
Yes, Kristen, the severance payments rebate is 25% of the severance paid, but note that it's calculated on the NIS insurable earnings. So I do know that some employers pay severance on actual earnings. In terms of if they're making somebody redundant, they will look at the actual earnings. So if you have some person in your employment who worked whose salary was above the NIS threshold, if you do take that into consideration, note that the severance rebate will be limited to the maximum insurable earnings. But I just want to add that employers, you do have a time frame within which you must pay severance. So there's that 2-month window that the Severance Payment Act provides you with. But also, now the question was geared around severance and if the person has to receive severance after the 13 weeks. Now, there are circumstances where after 13 weeks, an employee opts not to proceed to follow that procedure and claim their severance. And this may be because they expect to return to work. So once again, that's why communication is key. So I'll give you an example. If you were a hotel undergoing renovations, so you laid off your staff, but the renovations ran longer than planned, so now you're past the 13 weeks, but you anticipate reopening in, say, 16 weeks. An employee might opt not to claim for their severance because they know they will have a job after 16 weeks.
Yes.
Because if they claim for their severance, because they do have the right to claim at that 13-week threshold, but they don't have to. They may opt, given the circumstances, to hold on to know that they have a job that they can return to. So the option is in the employee's hand if they wish to proceed or if they wish to hold on with the hope of coming back to the organization. So I just wanted to highlight that the employee does have an option. They don't have to claim for the severance at 13 weeks, but they tend to make a decision based on the circumstances that face them.
Yes.
What if you have an employee? What if the employee has the ability to work remotely, but the employer does not like the idea of working remotely? The employer has a fear of persons not working remotely. What can we do in a case like this?
I'm not sure I'm understanding it's really a matter of choice. I mean, if you're unable to provide the employee with a safe working environment in the ordinary workspace, just because the employer doesn't like the concept of an employee working remotely doesn't mean that's not the option that they have left. There's an obligation to ensure that the workplace is safe. So to the extent that it is not possible for the employer to do that, they have to look at other options. In the workspace, they can look at the different options that they have to make it safe for employees to work therein. They have to take into consideration the spacing that they have, the nature of the work that the employees are doing, and so on. Otherwise, the employer could legitimately look into ways in which to make it easier for the employee to work remotely in a way that satisfies the employer. There are multiple means of being able to make sure that the employee is in fact working when they are in a remote location. And adjustments in these circumstances need to be made. I know that it's an unfamiliar situation, but it's not one that cannot be done. Ultimately, the question turns on whether or not the employer has the ability to keep employees safe. It may be a situation in which you have to preclude customers from coming to the office, provide other ways in which, for example, the services can be provided that provide the employees with a safer work environment. But if that's not possible, then the option is remote work or not functioning.
I think just to add to what Kristen is saying, is one area that I am hopeful that this crisis will change in terms of the attitude and the fear, because I know there's still employers naturally who in the traditional sense believe that you're not at work unless you're sitting in the office in front of them, which doesn't necessarily speak to productivity in my opinion. And I support Kristen in terms of there are ways to monitor productivity and work in a remote working environment, and to take our company out of a physical location and allow staff to work from home full time. And it's almost a year now, and it has been working quite well. In some cases, I believe productivity has actually increased for obvious reasons. But there are ways that we use to monitor what is happening. We have our team meetings online and so on. So I think the biggest part in that query there is the fear from the employer side. And I'm hopeful that with the use embracing technology, but also as a result of this crisis, that a lot more of us as employers will come around to how can we not necessarily go fully remote, but how can we fuse some degree of remote working into the arrangements, especially for various levels of staff with different responsibilities external to the workplace and so on, how we can be more considerate and fuse that with the physical location going forward after this crisis has passed.
There are a lot of resources that exist. And even like all you have to do is Google working remotely, and you will find the information that shows you how to manage a business, which is really a virtual business. And I find that even now there's an increase, a substantial increase in the number of articles and so on that are online, because everybody now needs to work remotely. And the same fears that any employer has, other employers all throughout the world, especially in America, have. And they've tried to quell those fears by providing resources and information and guides in terms of how best to do that. So I would encourage any employer who is concerned about it to take advantage of the benefits of research. And I'm certain that they will find something that will address that particular situation.
Does working from home require an addendum to an employee's contract?
It depends on the terms of the contract that originally existed, but I would encourage that, yes. I would encourage that an employee sit down and agree on exactly how the remote working is going to happen and document that and have everybody sign it, if that is possible.
So an employer has a housekeeper who is in their 60s, and for obvious reasons cannot work from home. However, needs to be cautious, and you as the employer also need to be cautious for yourself and your family, and would prefer not to have them in your house during this unprecedented period. You may need to work from home as a means of not being infected, as many companies are now doing, and B, your home is a bit different to an office workspace. So you leave work with the expectation that your home is your only safe refuge. You need your housekeeper to be home now, but the holidays with pay act indicates that to place them on vacation, you are required to give a minimum of 2 weeks notice. What would be reasonable in this case?
Okay, so if the concern is about the vulnerable person being exposed while they're in the workspace, I still think that social distancing may be sufficient in order to ensure that the housekeeper is safe, because there's no indication that just by being around where other people have been, that a vulnerable person will catch it. There's social distancing is really key. So you may want to organize yourself so that when the housekeeper is in a particular room, you are not in that room, or there's no one in that room who can in any way be close enough to the person so that they can become infected. Another consideration is, I understand that there's a 14-day notice period, but employees and employers have during this period been agreeing to vacation. Even if the law said 14 days notice, the employer and the employee have said, well, perhaps you should go on vacation now, and the employee says, yes, you're doing it for the safety of the housekeeper. That's what you're doing it for. And if they are similarly concerned about their situation, they might very well agree. Of course, you can't force them. That would be a completely different question. But if your employee is feeling the same concerns that you as the employer are having, and you come to an agreement that you'll take this time as vacation, so be it.
Employee returns to Barbados on vacation and is now under mandatory quarantine. They are not showing any symptoms at the moment. They cannot return to work and cannot work from home, as they are not set up to work from home and cannot be set up to work from home now due to the mandatory quarantine. The employee has already been paid for the full month. What options does the employer have during the quarantine period? They have paid the employee for the full month and the employee cannot work. They have not paid the employee and the employee cannot work.
Okay. I think I would imagine that this is also the subject of discussions that are being had with the various stakeholders. But if the employee is under mandatory quarantine, there cannot be an obligation on the employer to pay the employee. An employer may choose to do that just because, but in terms of strict legal requirements, the employer cannot be required to do that because the employee is not in a position to return to attend work due to no necessary fault of their own. It has been mandated that they stay home under mandatory quarantine. In that case, the employer does not have to pay. And it's unfortunate for the employee, but there's really no way that the employer would have to be bound to pay the employee in that situation.
So based on what the government has stated presently, and the employee is compelled with a note for their personal physician advising that they should not be in the workplace, then what then?
Well, then that would be sick leave, and they would be entitled to claim sickness benefit. And there's no requirement in law for an employer to pay a sick employee. But fortunately for that employee, they can claim benefit from national insurance, sickness benefit.
Can the employer send home the vulnerable employees on vacation?
As I would have indicated, it would have to be subject to an agreement between the parties. They would have to agree that that's what they're doing.
What is the minimum amount of hours an employee can be scheduled for under the term short time?
There is no minimum. There's no minimum.
So when this ends, we would want employees to come back to work. But if we have done a large payout through severance, that would put a financial burden on the company, and AS only pays a 25% rebate.
Yes, and that's why redundancy is not an ideal answer to these issues. Layoff is a much better answer given the expectation that it will be temporary. That's why I've indicated that redundancy is something that you really shouldn't necessarily look to do because of the requirement in terms of the payment of severance and notice pay and holiday pay all at once.
So what benefits, if any, are there for employees who have been working for less than the period required for severance?
There are no, let me put it this way. The employee will not benefit from a severance payment benefit. I would have to look to confirm whether or not there would be such a benefit in terms of layoff and short time if the period is less than 104 weeks. Because the 104 weeks specifically applies to severance. But that's something that I can actually check on, and I can send that through the BEC as a confirmation.
Sorry, the question was if the person has not worked for 104 weeks, if they are entitled to any benefits?
Layoff for short times. Yeah, there are benefits that they would be entitled to, but not severance. Certainly severance. Not severance.
Each NIS benefit has its own stipulation for how it can be accessed. So it would depend on if the person meets the criteria or not. But severance, as you said, has the 104-week minimum with that specific employer. So if that is not met, then severance is not due. The only thing that might be due if the person is being made redundant would be notice fee.
Yes, and any outstanding
holiday, but severance would not be applicable. In terms of unemployment, the employee has to have worked for 52 consecutive weeks. But note that NIS works on a quarterly system. So sometimes just because an employee might not have worked with you for a specific period does not mean that they might not qualify for other benefits, because they might have transitioned from one job directly into another and their contributions were consistent. So it does not always depend on what contributions were made from your particular organization.
Right. Except for severance.
Except for severance. We're talking about the other benefits like sickness and unemployment. But severance, it's 104 weeks with that employer.
Correct.
So what advice would you give to a hotel operation who will not see any revenue until the next tourism season? How do I budget for this type of operation as opposed to retail chain, which is still in high demand?
So, interesting example they use, because tourism by its very nature is already seasonal. I made the point just last week that I think to some extent, some hotels hopefully will not feel the full brunt of the COVID-19, because many of them were heading into their traditional off-peak period. It now being 25th of March and traditionally around the 15th of April, things start to fall off. I think the bigger issue for hotels in the context of this crisis is those who may have then seen an uptick in and around the crop over period and maybe subsequent to that. But I think, again, they would have already had budgets, I believe, that would have already accounted for that seasonality. So what they would be doing now, if you remember my presentation, would be to adjust those original seasonality plans they had to see how far down they come now. And they may even benefit from a deferral where people may not come for crop over now, but people may opt to come later in the year or next year. So again, you have to know your industry and do some research as to what is happening. Hotels should be in touch with tour companies and travel agencies and doing the research to see what is the feeling of the traveling public. I mean, we can look at the news and see what's happening in some of our source markets, the UK, the US, Europe, and see how that is going to likely impact us. I said to one person in the tourism industry yesterday that I think 9/11 is a good starting point in terms of trying to plan your way through this crisis, because even when we are told there is a quote-unquote all clear and the virus is now dissipated and you're free to be about your business, there is still going to be a certain degree of hesitancy on the part of the traveling public to get on a cruise ship, to get on a plane, to be in confined spaces and so on. It's going to take some time for that to wear off. So all of those factors have to be considered in terms of how you budget. But I think for tourism, their budgets are already seasonal type budgets and plans. So they should more be able to focus on the adjustment rather than having to redo a whole budget now, as some entities may have to do.
If an employee has a maximum time to claim severance after the maximum layoff period, how does the employee defer making claim in expectation that work with the employer will or may be available in the future?
Yes, it's up to the employee when they choose to elect to terminate their contract with the employer and claim severance. They can't do it before the expiry of 13 weeks, but they can simply wait and not actually claim. Obviously, if they get to the point where they, after 13 weeks, where it's been 20 consecutive weeks and they realize they don't think that they're going to be reemployed, then they can take the necessary steps to terminate their employment with the employer and claim the benefit. It's not a situation in which 13 weeks passes, and if you don't elect at that time, you lose your right to claim severance based on those 13 weeks.
With regard to short time and in a unionized environment, should the employer consult with the union before speaking with the employees? Unions can tend to prolong an agreement on short time versus layoffs. Given that the business may wish to be extremely flexible during this time, how do you recommend treating with any pushback from the unions?
I would recommend that you engage them. I think the unions are well aware of what is happening, and they're well aware that these are the exact circumstances in which employees can simply be made redundant. There's going to be some level of flexibility from the perspective of the chief labor officer. There has to be some level of flexibility because these are uncertain times. And I think that we need to give the union sufficient credit to negotiate with them understanding what the situation is as it is. You can't look past the unions in order to speak to your employees simply because it might be inconvenient. I think they're grappling with many of the same issues, and they just want to make sure that everybody's interests are protected. So I would encourage employers to still engage with the unions with the understanding that this is a sensitive time, and be certain to set certain time frames, because this is such a fluid situation. The other shoe could drop tomorrow. So you would need to set those strict timelines and say, well, obviously we can't negotiate for 6 weeks. We need to come to a conclusion on this, and I'm sending correspondence to the chief labor officer to let them know what I may or may not have to do.
Would you advise companies to relax accounts receivable collections to customers or reduce inventory stock?
Again, I think that needs to be industry specific. I think in terms of receivables though, yes, you have to put things in place. I think you have to assess the impact on your customers of the downturn. For example, if you're a vendor and most of your customers are in the tourism industry and they've just closed, I mean, there is little you can do to force them to pay when they have no revenue coming in, I think, and you need to have a meeting and you need to come up with a plan as to what they may be able to pay immediately, and you defer other payments for a 2 to 3 month period, similar to a loan payment. You provide them with a moratorium until they're able to get back on their feet. I mean, I will say though, vendors can only extend to their customers what is being extended to them. So if their bankers or other vendors are not giving them a significant ease, they are going to be kind of caught between a rock and a hard place as to the level of assistance they can then provide to their customers. But for sure, I can see where there needs to be a deferral of some payments in terms of receivables, but the extent of what you provide is going to be driven by your industry, is what I would say.
Thanks, David. Would you recommend, are there any, or do you have any advice on managing supply chain with the USA, UK, and Europe?
That's difficult for two reasons. One, the supply chain is significantly affected by the reduction in airlift, and for those who use sea freight, while ports have not been closed and many cargo lines are still functioning, I expect there are going to be delays because of how operations within the port will change, just to take account of social distancing and all these different things. So what I would recommend wherever possible is that people analyze their supply chain, see if there are any alternative regions of the world that they can access the same quality products or the exact same products. Or they would then have to, if that's difficult, they would then have to consider if there are products that they need to remove from their inventory temporarily until the pandemic eases, and notify their customers accordingly. Again, significant issues with the supply chain could simply lead to you having to suspend your operations indefinitely until the entire crisis is over. So that analysis, I think, has to be done and can be done under the heading of negotiating with your lenders and vendors. That's where you can assess it under that caption and have the conversation then with the different entities within your supply chain, depending on how short or how lengthy it is. But right now, it's very difficult to be awaiting items coming out of US and Europe and even China. And I think you would have seen some chains have suspended their operations and sales because I believe their supply chains have been significantly affected, especially where a lot of their manufacturing happens in China, in Asia, or even some parts of Europe.
Do you know of any various institutions that are what they're doing for persons who have been laid off but still have to pay like loans and bills and so on?
I am not aware offhand. What I can say for individuals and households, I know bankers, again, the credit unions have been inviting people to come in and have a conversation about what support and what assistance they require. But I am not positive as to if anybody, for example, has been offering loans or other cash support to individuals and households to facilitate them paying bills. But again, that is a big part of the uncertainty in this whole process, especially as businesses are forced to close or reduce their activity. What happens to the livelihoods and the ability of employees who are now stranded at home with no income or reduced income? How are they able to manage their own obligations? So I think that's still an area of open concern and uncertainty that I believe is currently being addressed, not just by individuals, but even the banking sector and others.
So Kristen, would you recommend holiday with pay as an alternative measure to redundancy, short time, and layoffs?
As I said, there is a requirement to provide 14 days notice. It is something that you can discuss with the employee, and I think that's something that some employees would be happy to have, only because they can guarantee that they'll be paid in the short term. But obviously, depending on your mode of employment and how long you've been employed, that will only last 3 weeks or maybe 4. So perhaps that is a first measure that can be engaged in following discussion and an actual agreement from employees. I would caution employers to be careful in terms of how they do that, because you don't want to make it appear as if you are forcing the employee to go on holiday, because then that would certainly be contrary to the legislation and what it is intended to achieve. But if you can come to an agreement with your employee, impress upon them that this is a way that you're trying to make sure that they earn during the period of uncertainty, then that's something that you really should do.
Kristen, just as a follow-up, if an employer opts to use the combination of holiday and layoff, can layoff come first, and if it prolongs past 13 weeks, then they move to holiday, or must they use holiday and then layoff afterwards?
I would say that they can use layoff. They can use holiday afterwards. As I said, it's only 13 weeks for layoff. The only consideration in terms of their ability to claim severance, because you have 13 consecutive weeks or 13 out of 16 consecutive weeks being laid off. So depending on how long their holiday is, if it was, let's say 4 weeks, that will put them at 17 weeks. And that might create a little bit of a challenge for the employee in terms of how they claim, how they terminate the contract, then to claim severance on the basis of a layoff.
Yeah, so that was my concern. So understood.
Mm-hmm.
Can you provide any advice on the steps to create a business continuity plan?
I can give you a few high-level steps based on the time constraint we have. Essentially, what the business continuity plan is looking at, it addresses your ability in the face of a crisis or any other business disruption to continue operating in the first instance, maybe remotely, and then once, or from another physical location, and then once the crisis or the disruption has passed, being able to regroup in your quote unquote normal fashion and carry on business. So we're looking at, in the first instance, what are the provisions to protect staff, to protect data, to protect inventory? What are the alternative means of interacting with your customers that are available to you? How do you safeguard supply chains? If I take a company, for example, like Massey Distribution on Spring Garden, where they have a warehouse, they have their office, the inventory comes into that warehouse from the port and so on. If they faced any major disruption and they had to relocate from there, they would have to address in terms of continuity, where do I now receive my stock? Where do I now house my stock? How do I, if they're unable to access their office and their data, how do I issue invoices? How do I receive orders from customers? So the continuity plan is really to address what are the critical factors that allow me to keep my business open? And if any of those becomes disrupted, what is my backup plan? Maybe backup plan A, B, and C, depending on how extended, how serious the disruption is to the business. So it covers finance, it covers staff, it covers inventory, it covers all the systems and processes of your business. And essentially, you're creating a backup plan to allow you to continue working. If you picture, for those of you who may use a computer system and have a UPS attached to it, the business continuity plan is almost like your UPS. If the power goes down, you can still carry on using your computer for a period of time based on the life of the battery of your UPS. So the continuity plan allows you to outline, how will I keep my business functional after I suffer this major disruption or this crisis? And each business has to determine what that plan looks like, taking into account those various factors. So that's at a high level, but of course we could always drill down into it. And again, Googling that on the internet, there are lots of templates and advice that you can get there. Following, I know, for example, Ernst & Young and some of the other accounting firms and other entities have put out documentation suggesting what the focus of your business continuity plans need to be in times like this. So there's a lot of information around, but in a nutshell, that's what we're looking at.
Thank you, David. And this one is our final question before we close. I know you said assess the business, but businesses such as hairdressers, barbers, and nail technicians, who the company relies on, but still is the biggest expense, and the nature relies on contact. What would be the best advice, if you can give any, on this situation? The fact that you are unsure of the length of time during this unfortunate situation will last, what would you recommend?
I think the first thing for businesses like those, the salons, the barbershops, and so on, my advice to them has been to stay open as long as you can, practicing the social distancing measures. I have one client who's actually a salon, and they took their own personal decision this week to close. And that was driven primarily by the fact that a lot of their clientele ended up being in the vulnerable groups. A lot of retired persons and so on. And while they could have opted to stay open, they thought it was difficult to have the vulnerable groups coming in, even after somebody else has been in there. And how do you sanitize and clean between customers and still be efficient? So they took the difficult decision to close. Luckily for them, they have resources that they can still manage expenses for maybe 2-3 months. But I still have them in negotiation, for example, with their landlord for either a reduction or a suspension in rent and that type of thing. In terms of the other point to consider is that many of these persons tend to be self-employed with limited or few or no employees apart from themselves. So it then becomes a business/personal issue for them, because their personal income is directly tied to the business income. And that's all within a single household, as opposed to where other households you may have an employee who is just one of many employees supporting the household. So I think, again, the plan, it is a protracted thing, but they have options to open on a partial basis. They have options to maybe dedicate one day to their vulnerable clients. and have others come in on other days, but still reduce the number of total days that they're open for the month. There's a range of options before them, but again, like everything else, they need to look at, assess their own situation and say, look, there's a reduced demand for these things, and how long do I think this will last? And just suspend services. Maybe the client I'm speaking about, they've suspended their services, I think, for at least the next month, and then they will reassess and see what is happening. Have we reached a full national shutdown by that time? Are we recovering? Are people more comfortable being out and about again? They will reassess after a 4-week period. So my main point here would be assess your particular position and your industry and take the wisest steps possible in the context of protecting your customers and your staff.
Thank you so much, David and Kristen. Thank you for sharing with us today and imparting on us your knowledge. And thank you to all those participants who came out and who shared their questions and their comments. And to those of you who are on Facebook who are still sharing your comments and questions, thank you so much for joining us today. If you do have any further questions, what you can do is forward it to help desk at barbadosemployers.com. I will be more than willing to answer your questions. What we're going to do with the series from this 5-part series is that we're going to prepare it and package it so that you guys can still have an opportunity for those persons who would have missed the earlier series to catch up on what was said. So that would also be posted on our website at www.barbadosemployers.com, and you feel free to check it out when we put it up.